Yo, what's up, everybody? Welcome to What the FICC, the show about fixed income commodities and currencies. I am Spencer Israel, joined by Ian Cully. He's the head of FICC at All Star Charts. Mr. Cully, how is your day going?
Excellent start to the day. How about yourself?
Good. Pretty good. But let's not talk about our days, Ian. Let's talk about commodities is a specific part of the commodity market. Last week, Ian, on what was it, Friday? Well,
Hmm.
actually, both days last week,
Yeah.
we spoke about commodities. We spoke about the grains on Friday and energy on Wednesday. Today, we're sticking with commodities, but we're focusing on base metals and mining stocks. Why? Why is that the theme today?
Well, the theme is that commodities continue to work. Now they've paused versus the other major asset classes. They've paused versus bonds, but the commodity versus bond ratio is still in an uptrend, and it looks like it's preparing to resolve higher and continue that uptrend. The same is for commodities versus stocks. Here we have the stocks relative to commodities pulling back to a multi-year downtrend line and a key Fibonacci retracement level and starting to resolve lower. It's a confluence of resistance and it's turning lower from that level. So commodities are starting to outperform stocks again, starting to outperform bonds. And what do we know about assets that are in strong uptrends? They tend to outperform their alternatives, and that's exactly what that's exactly what commodities are doing.
All right, so
The,
commodities are maybe we're preparing for a commodity super cycle. Maybe we're at the early stages of that.
yes.
Regardless, so that's why you are focused on commodities right now. But what specifically about the base metals has your attention?
Well, if we're interested in trading energy, which we are, highlighted that last Wednesday,
Yep.
then base metals fit that narrative. They fit that thesis because energy and base and industrial metals are the two pro-cyclical groups of the commodity space. They're the two areas that do the best during periods of economic growth or during periods of rising rates. And that's exactly what we're in today. Notice since the dollar peaked, we highlighted this chart last week, since the dollar peaked in late September of last year, base metals and energy have been the worst performing groups across the space. Now, why anchor back to when the dollar peaked? Because dollar and rates have been moving in tandem for almost 2 years now, right? So when the dollar peaked, rates peaked, and as rates stopped going up, chopping sideways, not really doing a whole lot, these pro-cyclical areas of the commodity space struggled. But since the US 10-year yield put in a significant pivot low on May 4th, the energy contracts have absolutely ripped higher, and we're starting to see base metals do the same. So I think it's a good time to shift our focus to those groups as well.
Maybe we should pause for a second. What are base metals?
So base metals, copper, aluminum, um, nickel, let's say cobalt, tin, I believe. And then some of the industrial metals, you think of like iron ore, steel, rebar.
Yeah.
You see
So
the list here.
these are
Zinc
all,
is also a base metal.
yeah, these are all the markets that you're thinking about right now. So, you mentioned rising rates. It's very possible that on the day that we're shooting this, that the Fed signals that they are going to start raising rates in a few months or something like that. And but to your point though, this has been the lag. This area of the commodities space has been the laggards, right? The base metals have lagged. Where was that chart we had of what was it? It was the base metals versus commodities, right? I think we had that chart, and it just
Yeah, absolutely.
the whole rest of the commodities um space market has outperformed base metals.
Yes, since let's say summer of 2021. And if you remember, a lot of stocks peaked around that period as well. So again, this is a very risk-on area of the commodity space, but this is starting to change, right? This is our base metals index versus our broad equal weight 33 commodity index. You see it bottomed, resolved higher in November of last year, late last year. It is now pulling back to that critical level of former resistance. Now the question is, will it turn into support? Will polarity 101 kick in? Well, it's a logical level for that to happen. It's a logical level for base metals to begin to outperform the broader space. And we're already starting to see that over the past couple months here.
All right. So what you're saying is not like, oh man, base metals have been ripping, you need to buy now. You're saying base metals have been not ripping, but we may be in the midst of a regime change. So
Yes.
let's look into this. Let's go deeper, if you will, onto the base metal complex. What specific markets or stocks, ETFs should we be looking at?
Well, we got to kick it off with Dr. Copper. Got to kick it off with copper futures. I think we're right at a big level here, around 395. We can call it 4. Big level that acted as support in 2021. You know, now it's been resistance for the past 8 to 10 months. You know, excellent to see copper resolve higher here. It would be a big feather in the hat for commodity bulls and just bulls in general, stock market bulls as well. And that's something. Why do we refer to copper as Dr. Copper, right? It's just because, you know, the news cycle and, you know, everyone throws that term around. No, it's because the market continues to prove year after year that global equities track copper. It's really that simple. And here the overlay chart of the global Dow, GDow, which is top 100 blue chip international stocks, overlay with copper futures here. They look almost identical. And what's interesting is that the global Dow is pressing up towards new highs, while copper is still kind of chopping sideways. So I think this is a big heads up where the stock market, and we're going to see with these ETFs and individual names, Spencer, stocks are really leading copper here.
Is this like an international correlation or a domestic correlation, or like is there a correlation to between copper and U.S. stocks as well?
Yes, absolutely.
Yeah. Okay.
Yeah, absolutely.
All right. Well, the U.S. stock market has been ripping here, so
yeah. Here we see Freeport. Freeport is, you know, it broke above or violated this downtrend line earlier, you know, late or early, I guess this last month.
Yeah.
Last month or early this month. And then the big question was, you know, is copper going to follow or not? Messy, but Freeport is continuing to catch higher, and now copper is violating its respective down trend line as well. So I think copper follows. And, you know, we don't have to trade copper, though. And that's the beautiful thing about commodities in this new super cycle that I think we're definitely in. I still think we're in the very early innings of a commodity super cycle that could last a decade or longer, but we don't have to trade futures to take advantage or express our bullish thesis on commodities. Freeport-McMoRan's an excellent example.
And this is the largest. This is like the largest steel / metals stock, right?
It's one of the largest copper mining stocks. We're going to get to another one that's actually even larger. It's just a massive company. But Freeport-McMoRan's the bellwether. When you overlay copper with Freeport, I mean, it's almost identical. So I'd love to track this this particular miner. $62 billion. You know, we've been talking about Freeport, you know, for a long time, Spencer, and we highlighted this 33 level, you know, months ago. And we wanted to trade against that level. We wanted to give Freeport a chance. We wanted to get long against 33, and it's been trending higher since. Getting ready to hit our initial target around 45, which is year-to-date highs. I think we get back above that, $50 roughly. is a good level to see some potential resistance or as supply come in. But if and when we get above that, I'm looking for a move up towards 70.
All right. And we're
But
at
if you don't
40.
want to trade Freeport, Freeport's kind of gotten away here a little bit. We can also trade ETFs. There's plenty of ETFs out there. Copper miner ETF, COPX. It's near the breakout level around 46. If and when it takes out that 46 level, I like it back up towards 70. It's a nice.
I'm looking at the top holdings in COPX right now. It's pretty diversified, pretty evenly weighted here. A bunch of, I mean, Freeport is in there. It's 5%, but it's like the 7th or 8th largest holding. In fact, every single one of the top 10 holdings in this ETF all make up between 5 and 6% of
that's great.
Of the fund. So it's pretty evenly weighted. Looks like a lot of international exposure, right?
Do you see Southern Copper in there?
Yep, Southern Copper is the 1, 2, 3, 4, 5, 7th largest weighting, just right above Freeport-McMoRan.
Beautiful. Another $65 billion copper miner printing new all-time highs, Spencer. I mean, look at this chart. This is a beautiful chart. We have an inverted head and shoulders pattern here. And what I love about this chart, there's a number of things. But one is it shows that these inverted head and shoulders patterns aren't just reversal patterns. Now, this is a continuation of the ongoing uptrend. And that's what we see a lot in these areas, these pro-cyclical or cyclical value-oriented stocks that are tied to these commodities. They're not breaking out of reversal patterns after historic sell-offs from last year. They're continuing their uptrend that started off of those 2020 lows. Also, looking down at momentum, I was talking to Evan the other day, our intern, and he was asking me about momentum and bullish momentum prints, because he was looking at the small cap energy ETF hitting over bot reading prior to reaching a critical breakout level, and he was wondering if it was constructive or not, or was it a good thing or a bad thing. This is excellent. I love to see that happen, and that's exactly what we witnessed in January. So earlier this year, buyers, they knew they were ready to send Southern Copper to new all-time highs. Now, it didn't happen immediately, but they took control of the market, had nice constructive consolidation over the following 7 months, and now they're resolving higher. Also, an important point is notice that the very abbreviated right shoulder here. I like to see an abbreviated right shoulder in comparison to the left shoulder of these type of patterns, because it just speaks to the strength and just the bullishness of buyers just accumulating and driving prices higher.
So maybe I should be asking you on all these charts like Freeport or Southern Copper, you have a level that you like, a level that you would like to own the stock at. Is there a level that you would stop yourself out at?
It just depends on the chart. So I like, and see, when it comes to stops, it really just depends on the individual investor.
Yes, it definitely depends on you. Yes, everyone has different risk parameters, no doubt.
Exactly. So some might like to use a moving average or an ATR as a stop, average true range. I see this gap here. It's just, I'd call it around 75. You can drop it a little bit below 75. But as a rule of thumb, I like to put my stop. If I'm trading a breakout, if I'm trading it tight, if I don't want to give it a lot of room, I like to put my stop just below the last day of a complete price action within the pattern. So not the breakout day, but the day just before the breakout day.
Yeah.
So but if there's a nice pivot low, like if you really want to give it a lot of room, you can drop it back below these pivot lows here, even down below around 70 or 65. But when I give a trade more room, then that then I have to pull back on my position sizing, right? Because it all comes down to risk.
Got it. Okay.
But
What's next here?
What's great about, you know, what I'm noticing in this space is it's not just, you know, the rally's not just being led by copper. It's metals across the board. And you're looking at tin, you know, tin absolutely ripping higher. We're seeing a bullish momentum thrust kind of play out that we've witnessed back in 2016 and 2020. You know, tin futures, you know, getting back up towards its 2022. Actually, not 2022, but its highs from late last year. Very constructive to see tin catching higher. Tin's in almost everything. It's in almost everything. Aluminum, you know, and this is a great chart. You see big decade plus long base here. You know, aluminum went up, hit all-time highs as war broke out in Europe. You know, Russia, one of the largest aluminum producers in the world. Obviously, since then, it has sold off dramatically. But it's, you know, it's repairing the damage. It's repairing the damage. So seeing aluminum futures stop going down, begin to catch higher.
Kind of looks like a downtrend to me. I don't know, like short term.
Short term, I mean, it stopped going down. It stopped going down. So I see, you know, it's back in the middle of this decade-long range. I mean, this is a great place for aluminum to begin to dig in and catch higher. But you know, we don't have to trade aluminum. We don't have to trade tin. Yeah, we can trade XME. You know, we trade the metal and mining ETF here. You know, and if and when it gets above, you know, its year-to-date highs up here around 58. Let's call it 60. Let's give it a little space there. But when it's above 60, I like it up towards 80. And this is a really diverse. Check out the holdings for XME.
Oh yeah,
very diverse. You're getting, not only are you getting mining stocks, you're getting a bunch of industrial stocks like steel producers, and you're getting a bunch of coal stocks too. I think Peabody Energy is in there.
Yep, Peabody's in there. It's also, so yeah, there's 35 different stocks. Sorry, 34 different stocks in this ETF. And the top 15 are all very equally weighted.
Mm-hmm.
They all make up around between 4 and 5% of the of the fund here. So names like CMC,
yep,
Nucor is in here, Freeport-McMoRan, US Steel, Peabody, MP Materials, Newmont, Cleveland Cliffs, Steel Dynamics. These are all in the XME, right? So a very, you know, very, very diversified way to play metals, no doubt.
Absolutely. I like this. I like this ETF a lot. But if you don't want to own the ETF, you want to give those individual names. Nucor, you just mentioned Nucor, $42 billion steel stock. You know, it's nearing the breakout level around 187. Let's call it 188. You know, if and when it takes out that 188 level, you know, I like it long up towards 240. And look, momentum. It's in a bullish regime. Recently hit overbought. You know, I really like this chart. Next, we got ATI. This is a $5 billion metal fabrication stock. You know, it's running right into a key extension level. You know, maybe, you know, it runs a little bit further and then pulls back and finds support at this level. I don't know, but as long as it's above 45, I like it long towards 70. Next up, we got Valmont Industries, Inc., VMI, $6 billion industrial stock. Now, what a beast. Look at this massive base, big breakout, ripped higher, consolidated for just over a year, another leg higher. Now it's finding support right around this key extension level on 282. Now you see, Spencer, I put this roughly 273 level here, and that's I'm dropping down the level I want to trade against. I'm dropping down my stop to just below the recent pivot low. So if when we get a real decisive breakout above 282, let's call it 283, I'll take that. I'll take that buy signal and I'll put my stop just below that 273 level. So here's, you know, the steel ETF XLF, the components of this ETF and the components of XME, there's going to be a lot of crossover. A lot of crossover. But I really like this ETF for this one reason, and that's because it's breaking out. It's breaking out to new highs. As long as SLX is above 68, I like it long. Let's call it 110. SLX, $100 roll on SLX up to 110. And again, look at that head and shoulders, that inverted head and shoulders continuation pattern. There's a lot of these. Seen a lot of these as I scroll through the charts.
That resistance, though, I mean, it sticks out like a sore thumb. So
it's so clean, right?
it is extremely clean.
Yeah, I really like this chart a lot. Another one, STLD. This is still dynamics, also in that XME ETF. As long as STLD is above 98, I like it long up towards 155.
You know what's wild to me about all these charts, Ian? Not all of them, but most of them, you're going back 10, 15 years.
Oh, yeah. Yeah.
I mean,
yeah, absolutely. And that's the thing,
it's because you have to, right?
Yeah, you have to. You have to in a lot of these. And some of them, I zoom in a little bit, over the past, like, say, 4 or 5 years just to get a better read on the recent consolidation. Right. But yeah, a lot of these stocks haven't really done much, in the prior decade. And that gets back, Spencer, that gets back to what we've been discussing, where, the markets that we're likely entering and will be trading in the coming decade are not going to look like the markets that we traded in the past decade, that were really driven by the strength in tech and growth areas.
For sure.
Not to say they're not going to catch higher too. Right? Not to say that the tech isn't going to catch higher.
Of course
Rio
not.
Tinto. This is that other big mining stock I was mentioning earlier. Oh, yeah. $113 billion behemoth. Another one of those inverted head and shoulders continuation patterns here. The resistance level for me is around 82, Spencer. I really like it above 82. If and when we get it, another $110, another $100 roll here for Rio in a bullish momentum regime. It's looking good. I want to see it get overbought on a breakout. And last but not least, I'm going to talk about Cameco. I had to bring a uranium stock, one, because it's breaking out. We've talked about it. Mm-hmm. We've been talking about CCJ. As long as it's above 33, I like it long up towards the 07 highs around 55. But because it when I think of metals, when I think about precious metals and the strength there, I think of Cameco. I think of uranium. I always think of it more like a metal or mining stock than I do energy, even though it's definitely energy related. So I like CCJ because it's it kind of blurs the lines between these two key pro-cyclical groups of the commodity space. And it's a great looking chart.
Ian, yes, to answer your question or comment, it is a great looking chart. You just ripped through a solid, 23 charts, but a solid like 16 actionable trade ideas here.
There's more. You mentioned a couple of names when you were ripping through that ETF. There's plenty of more out there. So we'll be rolling those out as those trades really shape up.
Yeah, a lot of steel, metals, mining stocks to have on our radar here. So if you want more, guys, the best way to follow Ian, obviously, he's on Twitter. The link to his Twitter account should be in the description. It's just Ian Cully on Twitter, or X, whatever we're calling it now. But the best way to follow Ian's research, there's two ways. There is his blog on All-Star Charts, which again is in the description. And then there is all the premium content that he is doing for the All-Star Charts members. If you want to get access to this, he does private calls every single week, which is basically similar to the call we're doing now, but just a lot more in depth and longer, right? Frankly, and with more ideas, right? So if you want to get that, I would definitely email or call the number on the screen. The number on the screen will get you to Mary. She can tell you all about how to get access. Just say you watched What the FICC, you like Ian's ideas. How can I learn more? So you can same thing with the email. We'll help you out there. Also, if you want the some free stuff that Ian does in addition to his blog, the chart of the day link is on the screen as well. That's a pretty good free email that goes out. Ian, any final thoughts? Oh wait, I did ask for questions in the chat, and Jonathan's mentioning the URA ETF. That's the isn't that the uranium ETF? I think it is.
It
Right?
is.
Yeah.
So we're gonna pull up a chart.
Let's look at what's in that bad boy real fast. The Global X Uranium ETF. Well, it definitely has CCJ in it. I can tell you that. Or maybe
I
it
think it's the
doesn't.
largest component, isn't it? Up near.
CCO. Wait, what did I say? CCJ? Yeah, CCO is the largest component by a lot, actually. This thing is very top heavy. It's got 25% of the URA ETF is just CCO.
Jeez.
So that's interesting. But yeah, I don't know. Do you have thoughts on that one?
Yeah, I got a chart right here. I'll drop. You know, I when I look at a chart of CCJ, here, I'll just drop it right below here. There we go.
This is
I mean,
for the
it's constructive. We have a level to trade against, right? We got a level to trade against around 2450. We call it 25. You know, if it gets above 25, you know, I like it long up towards, you know, 31, you know, secondary objective up towards 40. But I mean, why not just own CCJ? That's kind of where my head's at. I'd rather own strength, right? The whole idea is to you know, buy the strongest, sell the weakest.
Yep.
Right? That is the essence of relative strength studies. You always want to be in the names that aren't only catching higher on absolute terms, but are also, you know, outperforming their alternatives. So I'd go CCJ all the way.
All right. Thanks for that question, Jonathan. Jonathan is a frequent flyer here on What the FICC. We appreciate all of the comments in the chat. If you're watching the show on Twitter, pop on over to YouTube and hang out with us in the chat. Ian, always a pleasure. We'll be back on Friday. Obviously, we're here every Wednesday and Friday, 11:30 a.m. Eastern time. You can always watch prior episodes of the show. Just go to our channel and search for What the FICC there. And I guess that's it. Any final thoughts?
Yeah. Just thanks for watching. We'll see you on Friday.
All right. Have a good day, everyone. Smash that like. Thank you.
Everything's gonna be alright.